So this week we're addressing some of the market activity that we've seen over the last week. We normally like to have these be more longer term, evergreen focused videos, but this is an important event and it's unusual. So we thought we'd address a little of what's happened and then how you can think about it from a long-term perspective within your investment strategy. So Mike, you want to break down just high level what has happened with GameStop and some of the other stocks there, AMC and Blackberry?
Yeah, no, it's been a pretty exciting week or two. But the summary is GameStop, for many of you that don't know the company, is a video game retailer primarily in malls. I think they now have an online presence as well. Stock price went from somewhere around $5 a share this summer to I think about $350 a share last week. And this was not driven by fundamentals. This was driven by a number of individuals on a message board through Reddit that decided to start purchasing the stock in large volumes to push out what's called short sellers, people that have already sold the stock, to force them to buy it to drive the price up. So it's kind of viewed as the retail investor versus Wall Street. And now as we record this on February 2nd, the stock price today is down about 65%. So it has been a very volatile ride for those holders of GameStop stock.
Yeah, and we talked about it in the podcast there. There are really three words you can associate with this and on the emotional side of things. And one, it's the risk. What risk are you dealing with? Number two, the greed factor and how that's affecting your FOMO around this concept. And then three is the discipline idea and how that normally gets thrown out of the window when these things come down the pipe, because it's something that Mike, you joked, when your wife is asking you who's not normally interested in finances at all, right? And you have family members that are talking to you about things that are very interesting in the markets that normally couldn't care less about the markets. So you start to think about some questions you can ask. And we came up with three questions that are important around this concept when you're thinking about your investment strategy. The first one is, what is the strategy claiming to provide that's not already in your portfolio? So if Mike, the diversification aspect is important there, right?
It is. And diversification, the benefit there is you always have something that's doing poorly, but always have something that's doing well. And that's the benefit of not, getting, burned by one individual investment. The example we provided in the podcast was NASDAQ in the late 90s. For those that just invested in those tech stocks in the late 90s through NASDAQ, their portfolio went down somewhere around 85%, or the index went down about 85% shortly thereafter, where international companies, small companies, value stocks actually did very well over the next, few years and 10 years or so. So that's the benefit of diversification, not putting all your eggs in one basket. Many call it the only free lunch in investing.
Yeah. And if you're considering something like this, if it's tempting you and it's not in your portfolio already in some other aspect, then I think you have to ask the question number two: what can it reasonably add to your portfolio by including it? Right? Will it add expected returns? Will it reduce volatility or expected volatility in the portfolio? And then will it help you achieve an investment goal? And that's an important aspect from the financial planning point of view that we focus on a lot here in the podcast, right, Mike?
It is. And that's an important point that, there is the benefit of potentially making money on it, but the stress of losing money or not sure what to do. Should I sell it? Should I hold it? What's going on? And so just sticking, I know it sounds boring, but sticking to that plan, focusing on what you can control, trying versus what I call gambling, not investing, is what we've seen over the last couple of weeks here with these stocks, is not for most people over the long term, or for all people in my recommendation.
Yeah, I was reading another article and it said if you're making money in investing in 40 minutes versus 10 years, that's on the gambling side of things versus investing. So the number three question is, are you comfortable with the range of potential outcomes by including something like this in your investment portfolio? And again, that comes back to the financial plan aspect. Are you taking advantage of tax planning opportunities? Are you fully funding your 401k? Are you maxing out your Roth IRA? Have you looked at an HSA as an option for funding if you're a small business owner? Have you taken advantage of retirement plan opportunities? Are you investing back in your business versus looking at something like this to invest in? So manias can tempt us, can hypnotize us for days, often for months sometimes, and scare us. So we need to be aware of that and understand the amount of notifications and media push that we get daily, and how that can sway our belief system on the investing side of things and how that tempts us.
No, that is. I mean, I think the media is a good comment. As you mentioned, the podcast, we spend probably too much time in front of screens, and getting that time back and focusing on what you spending on time with friends and family should be more of a focus than checking GameStop stock or some stock price every few minutes.
So I hope this helps you a little bit in your theories and framework that you're developing for yourself. If you have questions or want to reach out around a larger strategy of financial planning and how an investment strategy can benefit you from that perspective, we have many videos here on our channel. You can reach us on financialsymmetry.com. And then you could also listen to our podcast, but you could subscribe here if you don't want to miss the next episode. Thanks for joining us.